Reports from the USDA, CONEP, and several issues with the South American crop related with economic data from the IMF. Who is going to comment on that? Mike Zuzolo. He is back again. He is from Global Commodity Analytics in Kansas, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. So, Mike, after some weeks that we didn't meet our schedules, uh, well, you are back, and we can start from what we were speaking on the pre-production of the program, and that is about the South American crop. The Buenos Aires Cereal Exchange has just released a number that they were reducing the soybean crop to 43 million metric tons. And I've been hearing about a lot of problems for a very long time with the Brazilian both corn and soybean crops. What can you tell us about the market? Why is Chicago isn't reacting to that?
Well, I think there's a couple big reasons, Luis, and it's nice to be back with you again. And, we really can pick up where we left off the last time we spoke, because this is really the heart and soul of what's going to be able to allow the corn and bean markets to go higher. It's either going to be weather related and what we're talking about with the South American crop, or with planting problems here in the United States potentially developing. These are the two main drivers when it comes to supply demand fundamentals that can allow us to go higher, even though that would be counter seasonal. And one thing I have to point out to the listener and the viewer to this week, December corn futures on a monthly chart, it's now running 9 months in a row consecutively higher this month. If we close higher in the month of April, that would be 9 months in a row. I went back all the way to the early 90s, late 80s. I could not find where we did 9 months in a row of higher closes. That the closest was 8 months in a row, and that was back during that 2007, 2008 time period. So we are on notice because the time counts are getting hard, and it's getting more difficult historically to continue to go higher. Doesn't mean we can't, though, if the supplies in South America keep dropping, or if the new crop supplies here in the United States don't get off to a very quick start and alleviate the market fears that we're going to have continued supply problems. So this is, I think, where we sit on the supply demand front. You and I have talked a lot about this over the last 3 or 4 months. There's two big bulls in this market. They both left this market, I believe, in the last 30 or 45 days. It was the La Nina bull. I think they jumped out for a period. They're coming back in, I think, because of Brazil's weather. And I think the reflation bowl also jumped out. And I think that was the one that jumped out the most in this last go around for correction. And I think they're possibly coming back in because of the outside market conditions, which we can talk about here in a little bit.
Yes, before we jump into the U.S. Crop, I would like to speak a little more about the South American crop. I have been hearing about problems for the Paraná farmers that are getting leaf hoppers for their summer crop. But I have heard even more often about the second corn crop problems, and they are saying that this is the worst year ever. So, do you think that would be a lead for the corn price? Corn would be the leader in the second half of the year.
Yes, I do, especially if the wheat market can come back around. And this is where the reflation bull and the La Nina bull both focus their attention on the wheat market. I mean, there's a big difference between how the corn chart and the soybean charts look compared to the wheat chart. And so we can see how, in my frame of mind, the La Nina Bowl, the Weather Bowl, and the Reflation Bowl pulled the plug on their long positions in the wheat, and that really held back the corn and continues to hold back the corn up until this week when we've come in. And now wheat actually has some weather to talk about, both in Europe and the Baltic regions for frost and also for very extreme drought conditions in the northern plains, North Dakota, northern South Dakota, and obviously the Canadian wheat and canola prairies would be, and barley prairies would be another big point of contention. So here again, we can see this line of thinking by the trade that they're coming back in on weather. But for the wheat, I think it's as much about the dollar as it is the weather. I mean, we're almost $100 an ounce off our lows in the gold. The dollar has gone down 1.5% after making a multi-month high just a week ago. And we've had some economic data led by the IMF, as you say, led by the historical and a new record trade deficit here in the United States, which would say our dollar is too expensive. We're buying too much from other countries. We're not shipping out enough from our own country. So that means our currency is too expensive. And you had some PPI numbers come out for producer prices, and you had ISM numbers come out, United States and China, both showing extremely strong gains when it comes to their non-manufacturing indexes. These are all demand pull inflationary indicators, whereas the weather is more of a cost push inflationary indicator. So I think this really put the spotlight back on the wheat, it being overdone to the downside, even though the conditions in Kansas and the hard red wheat belt are exceptionally good compared to what they could have been. There's other issues now the market's looking at, but I don't think we can make any mistake about it. Had it not been for the corn market and what's going on in Brazil with the safrinha corn crop specifically, I don't think we'd be testing that multi-year high of what was it, April 1st, 585 in lead month corn. Today's high was 583, I believe. Yeah, 583 was today's high in lead month corn. So corn is the leader. I think you are 100% right. And I don't look for that to change unless USDA comes out on their report tomorrow and cuts the world ending stocks for soybeans surprisingly a lot, or they take our old crop carryover here in the United States below 100, below 100 million bushels.
Yes, and before we get more of your macroeconomic analysis, I would like to get your opinion about the USDA report after the USDA Ag Outlook, because there was a significant change from the numbers of the Ag Outlook. So, what can you tell our viewers of what you think that happened?
Yeah, I will say this very bluntly. I don't know if we talked about this before or not, but I really think between the crop insurance premiums being so different between corn and beans, much more expensive for the corn, and the derecho that hit Iowa last year in the heart of our seed corn country of Iowa, specifically that Mason City, Iowa area, I really think that made a difference in terms of the corn acreage base. So I really participate in USDA's acreage base for corn. I myself, I don't put out my estimates to news wires. I do give it to clients and subscribers. I had very difficult time getting up to 92 million acres. I was at 91.9, and I was feeling more comfortable being at more closely associated with USDA's 91.4, 91.5. I see that number as very good as far as a solid number. The soybeans, however, I think can go straight up at this point, especially if there's any hint whatsoever of any kind of early corn planting delays, that chemicals and fertilizer aren't already on that ground. So I think this is a really key point to make, is that there's a lot of bean planting going on right now, Louise, in the United States this week. I think it's too early personally, but I'm no farmer. That's why I do market analysis. But it sure seems a lot cooler and wetter than what the National Weather Service was forecasting up here in this country for right now. So bean acres are going in pretty aggressively across both the west of the Mississippi River and east of the Mississippi River right now.
Yes, usually inflationary trade helps commodities, but it seems it will be a tough second half of the year given the fact that everything seems to contribute with more inflation, and that is likely to be more uncertainty. So, what are you advising farmers? We have had the IMF updating its numbers for GDP growth in many countries. A year ago, we talked about that, but those forecasts were pretty wrong. The IMF was very pessimistic at that time. Do you think, also, I want to ask also, do you think those forecasts are likely to change a lot this year as well?
I tell you, there's a real battle going on in the analysis that I'm doing right now, Luis. As I said a minute ago, we are starting to see the blooms of demand pull inflation because we're starting to see it show up in producer prices. And that would suggest that wages could start to go up. And so now it, I think, becomes a battle or a race between wages going up versus prices and costs going up and that getting passed on to the customer. Unfortunately, I think those prices for the customer at the retail level, whether it's food, and I think the United Nations FAO just came out with fresh world food prices, and they were up another, I think, a seventh or a 10th consecutive month in a row. We've seen higher food prices now. Uh, these food prices are going up, energy prices are going up, infrastructure prices are going up. And so, as the market and the financial market and the commodity markets builds in inflation in the wholesale price or the producer price, that gets directly passed on to the consumer. And so, meat prices are going to be much higher, energy prices are going to be much higher, bread prices are going to be much higher if this continues on. So you have to have wages come along and support these higher prices. And that's the trick of getting it right when it comes to the monetary policy and the fiscal policy. We're not there yet, but as you said, the second half of 2021 could be extremely complex and difficult to navigate for the hedger in both the grains and to a lesser degree the livestock. This is why the supply side and the weather means so much, because we don't have to worry as much about inflation and whether it's good or bad for the end user if the supplies keep going down, because demand doesn't have to keep going up. I think the second thing I would point out, in kind of on a similar mindset, is you have an issue with increasing tensions between the United States and China. We can't forget that they are a third of our business right now in the corn market. They are probably 60% of our sorghum business, if I had to guess right now. And look at what they've been able to do in terms of the pork demand and the wheat demand that we picked up from them. If we get into a geostrategic issue in the South China Sea, or if Taiwan becomes a very hot button, which it's starting to warm up based upon the Asian sources that I have, this could mean and spell trouble for the agriculture sector, because commodities, especially ag commodities, can and have been used as a political weapon in the past. This is the whole heart and soul of that sell and defend model. You're profitable, you're planting, and you don't know what the demand's going to be, and you don't know what the weather's going to do. So how else can you manage this kind of risk?
Okay, and what about the the export factor? Do you think the traders and farmers should be expecting more internal demand or more exports?
I have been very pleasantly surprised by the ethanol demand. And I continue to hear from producers here in the United States, middle of the country, that ethanol prices and bids are going closer to $6 a bushel for corn. ADM reported last week that they were going to come back online with two major plants in the middle of the country. I think the domestic, between the feed lots and the poultry flocks and the hog size that we have in terms of inventories, and the high prices for the hogs, and that the cattle are coming on, and the ethanol demand. I was shocked by this week's ethanol report, Luis, because we lost about 2.5% of our stocks. We're only about now 1 million barrels from the October lows, which was about a 4.5 year low. So we are dangerously close to a 5 year low in ethanol stocks, and we're just now getting into summer driving season. I mean, what a difference this pandemic issue has made in terms of a summer grilling season potential and a summer driving seasonal potential. So I think the internal market is going to stay more firm than the exports at these price levels. unless South America's crop is smaller and we become kind of the seller of last resort. And the countries like the Middle East and the Asian countries who are going to buy feed wheat and corn are going to have to come to us then.
And are you foreseeing more of the transportation issues in the coming months, both in the U.S. and South America?
Well, I do think that freight rates are going to remain very elevated, as are the energy prices. And so that's where it's going to be very important. The supply chain keeps, we watch that and monitor that very, very closely because those are going to be two major issues as far as raising prices. I think I had read in the Wall Street Journal this week that the head financial person for General Mills talked specifically about freight and talked specifically about energy prices. And this is going to be something that they're going to, in this industry, pass on to the consumer. So I think that is going to remain a big, big issue. But I have to go back and say to you, I really appreciate what you've been able to gather from the anecdotal evidence from the producers that you talk to in South America, because with razor thin inventories here in the United States and China's demand base being what it has been, it really means a lot that South American crop potential is there. And I'm looking right now at USDA's last month's forecast for Argentina's soybean production, and they were at 47.5. The average trade guess going into tomorrow's report is still just under 47 million tons. And yet the Buenos Aires Grains Exchange came in at 43 today. So that is a huge number when you're talking about how tight our supplies are. So I really do think this report could go either way.
Yeah, and what can you tell us about the weather in the plains right there?
Yeah, the Kansas wheat crop is every bit as good as what USDA said. We are second to only 2019. There was very limited freeze damage and from the clients that I talked to out west. And the clients south of me and some of the bigger producing wheat counties down closer to Wichita, Kansas, could have their best crop ever. So we are second to 2019 in the state of Kansas for hard red wheat. I would not be surprised with more rain on the way that we could get as good as 2019's crop here. That doesn't mean a lot when it comes to what's going on in the spring wheat country and what's going on in the Baltic regions. We'll have to put all that together. But right now, our crop is a world better than it was 3 months ago.
And what are you seeing in terms of producer intentions there?
I think they're going to keep most of their wheat. I do think you're going to lose some acres to soybeans and canola and sorghum, but the sorghum acres are already so large based upon the acreage base that USDA gave us, and that's part of the reason why the corn and bean acres were lower. It looked as though winter wheat and sorghum really took a lot of the corn and bean acres away. With our crops improving, Oklahoma's crops improving, Nebraska's crops improving in the hard red wheat belt, I don't think we'll lose hardly any to the corn, but I still think there may be a little bit of a pull towards soybeans, especially given the cash price of hard red wheat for new crop versus new crop soybean prices. I think it'd be very hard to not tear up wheat if it's just marginal and move that to soybeans.
This was Mike Zuzolo. Thank you.
Thanks, Luis. Have a great week.